Today's masterclass is your ticket to unlocking loans for your first multifamily deal. Whether it's a cozy 4-unit multifamily property or a 12-unit apartment building, you can get approved even as a total beginner. So in this video, I'm going to share with you what lenders want to see in you and in the deal. I'll share with you how to get approved as a total beginner. And number 3, I'll share with you the key differences between a residential multifamily loan and a commercial multifamily loan. There are differences and you need to understand them. And number 4, what lenders like and don't like on your multifamily deals. You got to make sure you send them the right things. And lastly, I'll guarantee you by the end of this video, you will be prepared to take the leap into getting your first multifamily loan approval. Let's make it happen. And at any point you have any questions for me, you can text me directly to Peter to 833-942-4516. Let's get started. I'd like to start off with the obvious. Why loans matter for beginners? And it's because getting a loan allows you to buy multifamily properties with other people's money, building wealth faster. Faster than what, right? Faster than single family homes. There is no comparison between a multifamily investor and a single family investor. This person here with multifamily is going to build wealth exponentially faster, guaranteed. Okay, so I'm going to break down these two loan types. So a 4-unit apartment building is called a residential loan. It's like buying a home, okay? And it's easier to get, okay? So if you can buy a home, you can buy a 4-unit apartment building. And then the other side of that, we have a commercial loan. We have a 12-unit apartment building here, which is a commercial loan. Commercials, anything that's 5 units and greater, that's a commercial loan, okay? This is a 12-unit, and it's tougher to do, but it's doable, okay? We just had a student, I'll show the picture right there. This was her first deal. It was a 12-unit apartment building, her very first deal. All she owned was her home, and now she has this 12-unit property. It's a beautiful property. And the main difference here is the approval for a commercial loan is mainly based upon the property's income. You probably know that, but again, I want to make sure you understand. Okay, so lenders, whether they are residential or commercial, they're not scary gatekeepers. They really aren't. So get that out of your mind. They are your financial partners who want you to succeed. Okay, think of them as that. And if you are prepared, they will hand you the keys to your first multifamily deal if you're prepared. All right, so next I want to share with you, how do you prepare for that? Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. Before we get started, what I want to do is answer your question that you're probably thinking is, Peter, you are the commercial guy. Why are you talking about 4-unit residential, right? And it's because of this. I produced this video. The link will appear on the screen. It's called Which is Better, a 4-unit property or 5-unit property, okay? And sometimes it's best to start at 4 units. Sometimes it's best to start at 5 units. Which is better? Watch that video, okay? It'll break it down for you. Right now, I'm going to start off with how to prepare yourself to get a loan on your 4-unit property. All right, so loans for your 4-unit multifamily property. Again, 4 units considered residential. It's like buying a home, okay? And the focus is on you and the property, okay? Commercial is about you, the property, and the plan. Residential, it's only on you and the property, okay? The down payment for your 4-unit property is going to be between 3.5%, that's right, 3.5% for FHA loans and 25% for more conventional loans, okay? And interest rates will be lower than commercial, and it's about the same rate as buying a home, okay? Very close. In the loan terms, you can get up to 30 years fixed on your multifamily 4-unit property, okay? As opposed to commercial, it's not going to be like that, okay? And then lastly, there's no prepay penalty on your residential multifamily loan as it is on a commercial loan, which can be very steep. Okay, so you can hold this for 30 years or you can sell it and pay no penalty. Now, here's what lenders want to see. Okay, lenders will look at your credit score to get approved. It's going to range between 680 for some loan types, 620 for some loan types and 680 for other loan types. They're going to look at your income. Okay, so what if all heck breaks loose and tenants move out or something happens, a flood, and you have to take everybody out? Can you afford this mortgage? Do you have money in the bank? Do you have a W-2? Do you have a job? They're gonna look at that. Okay, and then also they're gonna look at the property's projected income. These two are connected for you to get approval. Okay, so the stronger you are and the stronger the property is, the more cash flow it does, the higher likelihood of you getting approval. Okay, all right. And also, let me just share with you with this. This is not available on a commercial loan, but on a residential loan, 4 unit. This is available. You can actually house hack. Okay, so there is house hacking potential on a residential 4 unit. You can live in one of the units and rent out the others. Okay, and also if you are a veteran, you can do a VA loan and put no money down and house hack your 4 unit property. Okay, amazing, huh? So did I just remove all the excuses or what? All right, okay. Done with that, I'm going to move on to the commercial loan, the 12 unit property. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. Here we are now on the commercial side, the commercial loan. Okay, I'm going to use a 12 unit of property behind me to lay that out for you. Some of you may be wondering, Peter, I have no experience in real estate at all. How can I get approved for a commercial real estate loan? Well, it is possible. Okay, if you want it bad enough, it can happen. We are a mentoring company that teach students, many who don't even own a home, buy their first commercial property with a lender. So it is possible. Okay, all right. So now here's my 12 unit property. The down payment for this commercial property, 5 unit and greater, is going to be between 25–30% or even more. It just depends on where you are. Okay, the interest rate is going to be a little higher than a residential rate, as of today. Okay, the loan terms, right, in residential is 30-year fixed. That doesn't happen in commercial, right? It's usually the loans are going to balloon in 5, 7, or 10 years, but the payments are amortized over 25 or 30 years. Okay, all right. So the reason why is because commercial lenders don't want to be locked into a neighborhood for 30 years. They want the option in 5, 7, or 10 years to get out. Okay, all right. Next, prepay penalty on commercial loans. Yes, most loans do have them. So if let's say, for example, most of them are either 5 years or longer. So if you have your commercial loan for only 1 year and you want to get out, they could charge you up to a 5% penalty. Okay, that's huge. Okay, so it would be mindful of that. And again, in commercial loans, the focus is not on you as much as it is on the net operating income of the property and the debt coverage ratio, which is how much the NOI covers the mortgage. So income is very, very important on commercial loans and getting approval. Okay, all right. Here's what commercial lenders will look at for your 12-unit multifamily property. So again, commercial is deemed 5 units and greater, and the focus is more on the property than the person, than you. Okay, all right. Here's an example of that. The lenders will look at what we call the debt coverage ratio, DCR. So remember that acronym, debt coverage ratio, very important. It's basically telling you that your net operating income must cover your loan payments by 1.2 or greater. Okay, so again, this is how important the income is to getting approval for your commercial size property. They will look at your credit, okay, and they will look at your net worth to see what you own. But guess what? Okay, a very strong property can overcome your weakness in your credit and net worth. We help our students do that all the time by presenting situations to the lender that make you look better, okay, and the property, okay? And also the lender will pay very important attention to the property's condition and the location, okay? So remember, commercial loans, the lenders will look at you, the property, and your plan. Part of the plan they're looking at is what's the property's condition now and later on, and then what's happening with the location now and later on. And the reason why they put so much emphasis on the property's condition and the location is because the bank's main collateral is the property. Okay, so they're going to protect themselves and monitor their risk. So they want to make sure that the condition of the property is good, right, and the location is good. Got it? All right. So that is what banks will look for on a 12-unit property. Let's move on to the next. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today. Here we are with how to get loan approval on your residential property, multifamily property, or your commercial multifamily property. Okay, let's start off with the 4-unit residential loan. And by the way, I have this great video I produced. It's called 3 Steps to Get Started. Okay, to buy your first multifamily property. Very short video. It's going to really help you get started. Okay, exactly what to do in 3 quick steps. Okay, all right. So to help yourself get approved for your 4-unit residential loan, you need to boost your credit because remember they're looking at you more than the property. So boost your credit. Pay off some of your credit cards. Go to Credit Karma and clear out any discrepancies on your credit score. Okay, you need to gather documentation. Okay, you need tax returns, you need pay stubs, get bank statements, make sure all that's together. You need to find a lender. And what we tell our students to finding a lender is to go all out. Local lenders, your personal lender, credit unions, loan brokers, everybody. Okay, do that. And then next, after you get all this done, get pre-qualified. So when you do find a property, it gives you more confidence that you can afford it. And number 2, it puts you in a stronger position. Okay, so you can get pre-qualified on your residential loan here. You can't do that on residential. On commercial, because commercial, the lender needs to pre-approve the property first, right? And so you can't do that, all right? So you can get pre-qualified here. And number 5 is pick a solid property, a property that cash flows. Okay, what does that mean? Okay, what level of cash flow? You want your debt coverage ratio to be at least 1.2 or greater. And remember, debt coverage ratio is the amount that your NOI, your NOI covers your monthly mortgage payments. It needs to cover it by a ratio of 1.2, meaning your NOI must be 1.2 times greater than your mortgage payment. Okay, that's a good cash flowing property. All right, let's move over to your 12-unit commercial. I have a great video here called Can You Afford to Buy Your First Commercial Property? Right? You should watch that video. It's going to help you break it down how you can afford to buy your first commercial property. So number 1, to impress the lender, we want to have a strong net operating income. Okay, remember in commercial, the value of the property and the cash flow is determined by the NOI. The higher the NOI, the higher the cash flow, the higher the NOI, the higher your property value. Okay, that does not apply here for property value here on the residential side. Okay, you need a business plan. It's very simple. Okay, you're going to detail to the lender what the rents are, what the expenses are, and a pro forma where the rents can go. This is your plan. Okay, all right. Number 3, build a team. The most important thing the lender wants to know for your team is who's managing it. Okay, do you have experience managing a 12-unit property? If you don't, your priority number 1 is to get a proper manager who does. Okay, this will get you approved. Number 4, find a lender that knows multifamily. What I mean by that is do not hire your cousin who does home loans part-time. He's not going to cut it, okay? Because number 5, you need to have a level of tenacity of getting to a yes with your lender. You know what that means? That means that you may have to try 5 or 6 different lenders to get approved for your commercial loan because of various factors, your lack of experience. You may not have all the money. You may have to bring in a cosigner. Many things can happen on the commercial side, but guess what? We still get it done. So you need to be tenacious in getting this done. Okay, your future depends on it. All right, okay, the next thing I want to do is share with you what lenders like and what lenders don't like. Very important. Let's do that next. Here we are at the last piece here. Thank you for hanging out with me. I'm going to share with you what lenders like and don't like, along with how our students, our beginning students, and most of them are beginners, how they get actually approved for their multifamily loans, whether they're 4 units or 75 units. They still get approved. Here's how. All right, so here's what lenders don't like, and this applies to residential and commercial. Lenders don't like vacant properties if you're a beginner. They don't. You know why? They're too risky. Okay, no matter how good of a plan you have to resurrect a vacant multifamily property as a beginner, the lender sees as too risky because you're likely to fail because you're a beginner. Okay, so if you have a lot of experience, you can probably do it. As a beginner, I would not recommend it. All right, number two, lenders don't like high crime areas. Okay, again, it's too risky. Okay, when you are in high crime areas, you are renting to people that commit the crime. The people that commit the crime, do they pay rents on time? No, they don't. Okay, so again, too risky. Number three, the lenders don't like if you're going to self-manage your 4-unit property or your 12-unit property and you have no experience. Okay, they don't want that to happen because again, it's too risky. They want you to have experience or hire a experienced and local property manager. Okay, all right, now I'm going to share with you how our students from the East Coast and West Coast get approved every month on their multifamily properties. This is what we do for our students. Here's the most important things that we have them do. We have them find properties, okay, that are priced under market. And you're thinking, Peter, that does not exist today. Okay, guess what? It does, okay, because we have the skill, the strategy, and the know-how how to do this, okay? We don't find deals that are out there like everybody else. We have our own proprietary ways, and it's done every single day. All right, next, we teach our students how to find deals that have the potential to raise their rent. So if our students find a deal where their rents are at this level, but we know in a year we can make them this level, guess what? Lenders like that because when the rents can go up over time, that creates a higher NOI, which creates higher cash flow, which creates a higher DCR, debt coverage ratio. Remember that term? Okay, so when the rents go up and NOI goes up, guess what? What else goes up? The value goes up. You get to force the appreciation on your commercial property right here. Lenders love that. Okay, and lastly, this is really important and a no-brainer. We teach our students, and the lenders love it when you're in a good neighborhood. Okay, because you know the saying, you can fix a property, but you can't fix a location. That is so true. Here's another term. You can't do a good deal in a bad neighborhood. Okay, and the lenders know that. Okay, and we know that, so we do not allow our students to go into bad neighborhoods because we know they will be unsuccessful. So the neighborhood is very, very important. Got it? All right, everyone. Thank you so much for hanging out with me today. If you are with me still today, still right now, you are my favorite viewer, so I thank you so much. If you really like this video, go ahead and hit the like button so we can produce more for you. Again, I thank you so much, and I'll see you at the next video. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my protege program right here.